Dr. Ralf Kohlhepp. He's a tax advisor, lawyer, and specialist in tax law from Weidmann Law in Germany. He will provide crucial insights for German attendees. He will review important taxation considerations when moving to Mauritius and the best vehicles for buying property or investing overseas. Welcome. Thank you for being with us, Ralf.
Happy to be here. Looking forward to sharing the information. My part will actually be to show you the consequences for a German buyer of real estate property in Mauritius. And the considerations, I'll see whether I can have control over the slides. Here we are. First, a little presentation of our firm. I'll keep it short. This is me. I'm a tax advisor, lawyer, and CPA in Germany. Our experience focuses in international real estate transactions, German exit taxation, and double taxation. And my partner with me in our boutique law firm is Christina Weidmann, and she's a notary public in Berlin, which is important if you need documents notarized, etc., which is a very common thing if you act in international real estate transactions. She's also experienced in international wills and inheritance law, which is another aspect I will refer to at a later stage. So questions to consider when buying, and Tahuna pointed out some of them, which are how should you buy property? This is not only a question that is relevant from a Mauritian side, but also from a German side. So from the German side, you will take into considerations exactly the same things that Tahuna pointed out from Mauritius side. Would you rather buy in joint tenancy, or would you buy through an entity like a limited liability company, either a Mauritian or a German company? I will refer to that later. The main question, however, which also has implications for all the questions above, is will you keep German residence? So will you basically move, or will you stay in Germany with a residence? This is a question that is also connected to, will you have ongoing obligations in Germany? Do you own a company? Are you paying alimony to any dependencies? Are you having loans to pay? Do you own other property, for example, in Germany or in other parts of Europe that you have to administer? And last but not least, the question, are you financing? And if you are financing, are you financing in Germany or abroad? So all these questions have to be considered, and I want to give you some guidelines of how to manage them and how to go through. So, of course, keeping a residence or not keeping a residence is a legal question, but is also a taxation question. If you look at German tax law will have you as a fully taxable person if you are a resident of Germany or own a place where you can have residency. So leaving Germany is basically, and nowadays you hear a lot of leaving Germany. There was an article in the newspaper Welt yesterday, which was actually the headline was, if you're considering leaving Germany, do it now. So you see this is a quite up-to-date topic. So if you consider leaving Germany, you need to do it full throttle. So you need to either sell or rent out your properties that you have in Germany, because you shouldn't have any tax residency, because this would trigger, if you would keep it, you would still be a taxable person, fully taxable person in Germany. So nothing would be gained. The question is, what constitutes a residency? And this is not only if you own it or if you live in it, but also if you have the possibility to use it fully for yourself. There was a very good known case in Germany, which is Boris Becker. It has been some years, I know. He was a famous tennis player, and he moved to another tax haven in Europe. However, the famous saying under tax professionals is he kept his toothbrush in his sister's apartment. And her sister gave him full access to that apartment. So he was still considered a fully tax resident in Germany, which of course came into effect not once he left, but years later. And so he had to repay a whole bunch of taxes. So if you do it right. The question of financing, this is so basically talk to someone if you want to do it. The question of financing, if I want to refer to my last point on that slide, is depending, of course, on interest rates and on how to put out securities for your for the loan. It also depends on whether you at all need to finance or if you can pay cash. I will leave these legal questions and I will move on to the, of course, I already touched tax. Tax is a main issue, but I will move on to the more tax implementation, tax issues. So the main thing to consider if you think of moving residency, leaving Germany, is Wegzugsbesteuerung, German exit tax. The funny thing is, even if you move to Mauritius and plan to actually keep your German residence, so you don't want to fully move to Mauritius, the exit taxation would hit. Why is that? That is because being also taxable in Mauritius as a resident there, you can have double taxation. There is a double taxation treaty. I'll touch that later. But if you move to Mauritius and if you still keep your German tax residency, there are certain parts of your global tax. For example, if you're selling a German company that are restricted for the German government to tax after you move. So restricting German taxation triggers exit taxation. What does that mean? If you do have shares in a German limited liability company or any limited liability company, the exit, the leaving of Germany would mean that it is considered sold. So every hidden reserve is being taxed at that very moment. And since Mauritius is not in the European Union, obviously, there is nothing that is giving you like a potential exemption from that tax. Next things to consider, income from Germany. If you still have income from Germany, where is it taxed? So Philip was mentioning the self-employed. The self-employed can be based either fully in Mauritius, or he can still operate through an entity in Germany, like a partnership or whatever. So also these structures are very important to take into consideration in regards of your future taxation. For example, a German company that is not a limited liability company, but a partnership would be taxed where the main work is performed. So if it is performed in Mauritius, this German entity would actually have a subsidiary in Mauritius, which will also trigger taxation issues. So take that into consideration, consult with someone, discuss it before going. I already touched on keeping a residence in Germany. Double taxation treaty is in place between Mauritius and Germany. It has a tax credit system. Philip and Tahuna mentioned renting. So if you consider renting out your Mauritius property and you stay in Germany, there is a tax credit system. So Mauritius can tax you, and the German tax will only be on the difference between the tax rates. We were talking about tax rates. Tax rates in Mauritius are very low. It's also a tax bracket system that you know from the US and Canada, which means that the lower brackets are always taxed in that lower amount, whilst Germany does have a fully proportional system. So if you have an income of 50,000, you're taxed at a certain rate for the full amount. So it is not like in Mauritius, US, or Canada, where the tax brackets are safe under those lower brackets. So this means having income from a Mauritius real estate property will be tax exempt for the part that is taxable in Mauritius at the Mauritian rate, and then the German rate kicks in at the higher end. Okay, so dividends, potential capital gains taxes stay if you're keeping a residence in Germany. If you are only a tax resident in Mauritius, you will only be taxable in Germany for your German-sourced income and potentially for any permanent establishments that you do have business-wise in Germany. So owning Mauritian property via a German limited liability company or a Mauritian limited liability company, which Tahuna just pointed out, can, if you are still a tax resident of Germany, trigger taxes. Why is that? There has been also a famous case in the German tax legislation concerning Mallorca, which is another place to be for Germans who want to go to a sunnier and more welcoming atmosphere. However, if you own property through such an entity and you are a resident of Germany, this entity will mostly be still in some kind run by you. So if this is the case, this company might be taxable in Mauritius, but it might also be taxable in Germany, which is at first sight not a big problem, because all the income of this company, being a real estate company, would be taxable in Mauritius. However, if you use that property yourself, if you don't rent it out, but if you use it yourself, there is a so-called dividend in disguise for owners who use that property in their limited liability company themselves, and they don't agree on at arm's length rentals between themselves and the company. So there are things to consider if you think about doing that also from a German side. We talked, or at least Tahuna talked, about Mauritian companies and trusts, and the possibility of direct individual or joint tenancy was mentioned by me. If you still have real estate in Germany, consider selling it tax-free before you move. Why is that? Because if you move and you left the German jurisdiction, the 10-year tax-free period is not coming to an end in Germany, but this property suddenly moves to your property as a Mauritian taxpayer. And even though the Mauritian tax is pretty low, there might be a taxable income attributed to a potential sale. However, I just learned that there is no capital gains tax in Mauritius, so I understand that there is no taxation on selling such properties. Rental income will still be taxed at German rates if you keep on owning that, and if you consider owning property in a limited liability a company, there is a limited German dividend tax due to the double taxation treaty at 15%, which is also a positive aspect of this situation. As I mentioned in the beginning, you have to consider inheritance structuring. So if you own property abroad, so not only in Germany, you need to have a will set up that will focus on who is actually going to be the beneficiary. You can use a trust. As Tahuna mentioned, you should consult with both your German and your Mauritian lawyer and tax advisor. There are no inheritance, estate, or gift taxes in Mauritius, but please consider that after leaving Germany, there is a 5-year period in which you will still be subject to German taxation. And just to end on another not so funny but interesting note, there have been several very interesting German cases, but one was exceptionally interesting about a German again leaving Germany and then gifting to his son a huge amount of money and real estate property. He thought he is safe because he's outside the German jurisdiction, and his son already was. However, the 5 years weren't over, and once he came back to Germany, he had handcuffs on his arms because he was liable for German inheritance taxes. So please consider this. Keep in mind the 5 years. And consult with someone to discuss details. This is us. This is my presentation of the German tax consequences. Philipp, back to you.